With the help of CRA's Home Buyers Plan, qualified first-time home buyers can withdraw up to $35,000 tax-free from their RRSP to use as a down payment on a home. By participating in this program, you can benefit from the tax benefit RRSP contribution offers while setting aside money for a down payment on a property. Let me make it simpler for you. RRSP helps you to lower your tax bill by allowing you to deduct RRSP contributions from your taxable income. If you make a withdrawal from your RRSP, the government will consider that as a taxable income. But the government can allow a tax-free withdrawal from your RRSP if you qualify under a home buyer's plan. Instead of calling this as a withdrawal, I would like to call this as an interest-free loan from your RRSP. Because you will have to pay this back within the next 15 years. If that's all you want to know, thanks for watching. Wait, don't leave. If you leave, then it will be bad for this video. But if you stay, I can guarantee you that you will learn something new about this program. If you find it helpful, consider leaving a like. Let's start with the eligibility requirements. To withdraw money from your RRSP to purchase or construct a qualifying property, you must be considered a first-time home buyer. You are considered a first-time home buyer if, in the last 4 years, you did not occupy a home that you owned or one that your current spouse or your common law partner owned. If you or your spouse or your common partner has previously owned a home, you may be still considered a first-time home buyer. And it is also possible that only one of you may be considered as a first-time home buyer. The second criteria is you must be a resident of Canada when you withdraw funds from your RRSP, up to the time a qualifying home is bought or built. The third criteria is you must have a written agreement to buy or build a qualifying home. And the last criteria is you must intend to occupy the qualifying home as a principal residence within 1 year after buying or building it. On a quick note, so if you have already participated in Home Buyers Plan, you may be eligible to participate again if your repayable home buyers balance is 0 on January 1st of the year in which you are planning to make the withdrawal. And you should meet all other eligibility criteria to be a first-time home buyer. The criteria are slightly different if you are a person with disability or if you're helping a related person with a disability to buy or build a qualifying home. So please make sure to check the link in the description for more information, or if you have any questions, comment below. We can help you out. Now let's discuss the withdrawal process. To withdraw funds tax-free as a part of the Home Buyers Plan, you will need to fill out T1036 form. This is also called Home Buyers Plan Request to Withdraw Funds from an RRSP. You should submit this form to your financial institution to let them know your intention to withdraw funds. Some brokerages will help you to fill this one out. It's not possible to withdraw money from your RRSP and then claim it as a part of the Home Buyers Plan. So make sure to do this the right way. It's possible to make multiple withdrawals under the Home Buyers Plan in the same year, but it shouldn't exceed the $35,000 limit. If your spouse also qualifies as a first-time home buyer, they can withdraw a maximum of $35,000. This means if you are a couple who are both first-time home buyers, you can withdraw up to $70,000 from your RRSP. On a side note, you can only take money from accounts in your name. For example, a contributor can't withdraw from a spousal account because the account is in spouse's name. The next piece of information is an important one. If you are planning to contribute some money to your RRSP and use it right away towards your home buyer's plan, then you might have to think again. Because contributions made within 90 days of withdrawal are not eligible for home buyer's plan. You also need to use the money on your new home within 30 days of closing and taking ownership of your new home. I usually see Home Buyers Plan as an interest-free loan because all that money you plan to take out under the Home Buyers Plan need to be repaid each year. These repayments need to start in the second year after the Home Buyers Plan withdrawal was completed. Participants must repay a minimum of 1/15th per year. If you have a hard time understanding the term 1/15th, just divide the total money you took out of your RRSP and divide it by 15 years. Because you get 15 years to pay it back. If you're lazy to do the math, don't worry. CRA will send you a Home Buyers Plan account statement with the total amount owing and the minimum payment due. Your home buyer's plan account balance is also shown on your notice of assessment and your CRA online account. Contributions made to repay your home buyer's plan balance do not affect your contribution room, and you are not able to use the RRSP tax deduction for RRSP contribution made to repay your home buyer's plan. So if you need some tax deduction, you have to contribute on top of your repayment. You will need to report the repayment on Schedule 7 and submit T1 General Income Tax Return. You must make the annual minimum payment, and also you are welcome to do further repayments to reduce it faster. I know some of the information I provided are a bit confusing. If you have any questions, please comment below. I would be happy to help you. And don't forget to leave a like if you found the content valuable. RRSP contribution receipt will be offset by the amount declared on Schedule 7 as home buyer plan repayment. You also need to ensure that you are designating RRSP contribution as repayment of the home buyer's plan rather than a regular RRSP contribution. Many Canadians fail to do this, and as a result, they default on their home buyer's plan. So if you made the withdrawal and decided not to buy or build the qualifying home before October 1st of the following year, you either get to cancel the withdrawal or CRA will consider a replacement home. If you decide to cancel the home buyer's plan, you must complete the form RC471 home buyer's plan cancellation and include a letter of explanation and a receipt for the redeposit of funds. You can deposit the funds into RRSP in your name. Home buyer's plan repayment does not count as a contribution for tax purposes. If you choose not to repay the full amount you withdraw, any funds that are not redeposited will be treated as normal RRSP withdrawal and must be declared as income and will be subject to your marginal tax rate. Cancellation repayment must be made by December 31st of the year after you made the withdrawal. If you decide not to buy the home, your second option is a replacement home. The CRA will consider the replacement home if you still meet the eligibility requirements for the program. You must notify the CRA of the replacement property, including your name, address, social insurance number, and the address of the replacement property. You must also state that you intend the replacement property to be your principal place of residence within 1 year after you buy or build it. If you buy the property before October 1st, of the following year after the withdrawal, it will be considered a qualifying home. If you're building a home and the closing is delayed, CRA will consider your occupancy delayed if you can show that you paid the contractors for the materials after the date of your withdrawal. And make sure that this was done before October 1st of the year after you withdrew the funds. So before I wrap up, I just want to say that you cannot use home buyer's plan for a second home or a rental property. So I hope this information was helpful for you. If you have any question regarding home buyer's plan, I will be happy to help you. Please post it in the comments. If you find this information valuable, consider leaving a like. It will help my channel. And thanks for watching. See you in the next video.